Here are the crypto top headlines covered in this video. Is the crypto market bottom in? Here's what various signals are suggesting, according to analyst Jason Pizzino. Next, DeFi rises again as Aave hits new all-time high in weekly borrowers. Also, tokenized U.S. Treasuries expected to surpass $3 billion by end of 2024. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline is the crypto market bottom in? Here's what various signals are suggesting, according to analyst Jason Pizzino. Analyst and trader Jason Pizzino is weighing the possibility of whether the crypto market could experience more downside. In a new video, Pizzino tells his 332,000 YouTube subscribers that there are pretty good signs that we may have seen a low on the downtrend that the total crypto market capitalization has witnessed over the last couple of weeks. According to Pizzino, one of the signs is that the total crypto market capitalization's recent downtrend reversed after reaching the 50% retracement level on the weekly time frame. You can see that bounce came dead on the bull market range, 50%, so that's exactly what you like to see for a balanced market. The crypto analyst also says that the number of weeks it took for the total crypto market capitalization to move from the cycle bottom to the cycle top and back to the 50% retracement level is almost similar. Now in terms of time frames as well, you're getting a similar balance in time here. You've had a roughly 21 to 26 week move to the upside, and we've just completed a 21 week move to the downside. So it's nice to see a balancing of time, and on top of that, it's come out on top of the 50% level. Pizzino further says that the Crypto Fear and Greed Index and the volume indicators are further reinforcing his belief that the crypto market correction is potentially over. The Crypto Fear and Greed Index is a tool that gauges the fear or greed levels in the market, with a reading of extreme fear indicating oversold conditions and a reading of extreme greed suggesting overbought conditions. So a lot of these signals are coming together at a good stage of the market. You're getting extreme fear show up and then a strong bounce away on very, very strong volume. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, DeFi rises again as Aave hits new all-time high in weekly borrowers. Layer 2 chains, Base and Scroll, have contributed to Aave's recent borrower and depositor growth. Decentralized finance protocols appear to be showing signs of recovery, with lending and borrowing platform Aave hitting a new record in weekly active borrowers. In a post on X on August 14th, Aave founder Stani Kulachov reported that the lending and borrowing protocol has reached around 40,000 active weekly borrowers, eclipsing the previous high in late 2022. Data shows it has been driven by the emergence of new lending markets such as Base and Scroll. Base now represents almost 30% of the total unique wallets on Aave v3, according to Dune Analytics. Layer 2 platforms Arbitrum and Polygon are second and third, with Aave wallet shares of 23.4% and 21% respectively. At the same time, Kulachov noted that the weekly depositors on the platform were almost at peak levels. According to Dune Analytics, the number of Aave depositors spiked earlier this month. Aave is a decentralized platform running on 12 chains specializing in over-collateralized loans. It enables users to deposit crypto to take out loans. It uses smart contracts to automate the process, with preset rules on how funds are distributed, collateral is handled, and fees are assessed. Aave is the third largest DeFi protocol in terms of total value locked, according to DeFi Llama, with a reported TVL of $11.85 billion, while protocol TVL has increased 70% so far this year. It remains down from its peak of around $20 billion in October 2021. Meanwhile, there is a growing narrative within the crypto community that DeFi is on the rise again as protocols begin to recover. DeFinance Capital founder Arthur Chong commented on the Aave growth on X, stating, "The mismatch between growth and valuation is where you get the best R to R for investing." In early August, Cointelegraph reported that DeFi active loans had returned to levels not seen since early 2022 at around $13.3 billion. Additionally, TVL for the overall DeFi ecosystem has gained 40% so far this year to reach $90 billion. However, the market correction has caused it to take a hit recently. Our next top headline: Tokenized U.S. Treasuries expected to surpass $3 billion by end of 2024. Increased crypto adoption and high Treasury yields could push tokenized U.S. Treasuries toward a $3 billion market cap by the end of 2024. The rapid growth in global crypto adoption, up 34% based on the number of holders since 2023, has increased the demand for stable, low-risk digital assets. Tokenized United States Treasuries give users access to government bonds within the crypto ecosystem. The figure below illustrates the rapid growth of tokenized products since January 2023, with their total market capitalization increasing by over 150% year to date. To investigate the sector's potential market capitalization by the end of 2024, Cointelegraph's analysis employed three statistical models: Autoregressive Integrated Moving Average, or ARIMA, Generalized Autoregressive Conditional Heteroscedasticity, or GARCH, and Linear Regression. The figure below displays the projected capitalization of the 12 tokenized U.S. Treasury products aggregated. The ARIMA model predicts $2.12 billion, GARCH forecasts $3.93 billion, and the linear regression model estimates $2.47 billion. These can be interpreted as bear, bull, and base case scenarios, respectively. A weighted combination of these three models suggests a market capitalization of $2.66 billion by the end of 2024. The recent interest by decentralized autonomous organizations, or DAOs, in tokenized U.S. Treasuries makes them a potential source of capital influx into such products. Two DAOs, Arbitrum and MakerDAO, have announced plans to invest in tokenized U.S. Treasuries. Arbitrum intends to invest around $25 million, around 1% of its treasury, while MakerDAO plans to allocate $1 billion, around 19% of its treasury. Most DAOs lack stablecoin reserves, which could be easily converted into yield-bearing bonds. However, despite this, some are now consolidating their treasuries with real-world assets to ensure long-term stability. DAO treasuries often primarily comprise their own tokens. It is unclear exactly how DAOs might go about converting their treasury tokens into tokenized bonds. Instead of selling these illiquid tokens on the open market, they might pursue partnerships with bond issuers and attempt to pledge them as collateral or gradually acquire the tokenized bonds. This would help mitigate volatility and avoid the price impact of sudden, high-volume sales. If more DAOs follow suit and allocate portions of their treasuries to tokenized U.S. Treasuries, this could lead to substantial inflows. As of July 30th, total DAO treasuries amounted to $24.3 billion, allocations of 1% or bear, 5% base, and 10% bull to tokenized U.S. Treasuries would yield potential additional inflows of $243 million, $1.22 billion, and $2.43 billion, respectively. In the grand scheme, this would mark an increase of between 13% and 31% from today's tokenized U.S. Treasuries market cap of $1.85 billion. In summary, Cointelegraph expects the demand for tokenized U.S. Treasuries to grow as crypto investors seek low-risk, yield-bearing ways to part with their money. However, challenges may arise soon as the Federal Reserve is expected to start cutting interest rates in September and could reduce them to 4.25% to 4.5% by December, down from the current 5.25% to 5.5% range. As the market enters an environment with lower rates but sticky inflation, the appeal of U.S. Treasuries as an investment will decrease. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.